following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Well, yes, Tom, your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Accept others the way they are. You cannot change other people. To try to change them to fit what you want is like trying to change a dog into a cat into a horse. They are what they are, and you are what you are. And that's a beautiful thing, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials down 146. You get the NASDAQ off 71. S&Ps are down 17.5. Gold contract up $5.70, trading at $13.2650 an ounce. Silver up 6 cents, $16.60 an ounce. Copper up a penny at $3.11 a pound. Light sweet crude down 69 cents, $60 rather, 67 cents. We'll have those API numbers out at 4:30 this afternoon. Is it what day is it? Tuesday? No, yeah, Tuesday, cool. 4:30 this afternoon. Notes, 10-year note up 4 ticks, 120.11. 30-year bond up 12, 144.03. King dollar down 160 ticks, trading at 89.265. The euro is trading at 123.91 to $1 US. The yen is at 106.67 to $1 US. Our phone number is 877-927-6648. Give us a call, folks. Well, I know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? So let's go take a look at the future. So you got a S&P out here going into the 27th. That was your last swing high. You get a failure on price, failure on volume. We got to a price point of 28.07. You're at 27.71 right now. Now, intraday here, this is going to get really pretty cool because what you have is this. When we bring this back, what we had just done at the top of the hour is that we were breaking the first leg down, which is 27.74. Now, that leg had monster volume. We had, on a 10-minute, you had 80,000 contracts. Bottom line is that you dip below it, went above it again, but you have an expansion of volume that's happening. Now, we don't have volume like that, but guess what? The further you go away from the 27.74, the more probability that it lines up. And I'll bring this back a bit so you can see what this is lining up into. The S&P is lining up into the expansion on Friday when the S&P, went from 27.55 up to the 27.60 at just before the open when the number came out. It was a jobs number. The jobs number came out. So that area there's two different things happening at that area. So the number is 27.63. That being said, guess what? There's not a huge amount of volume there. There is volume to stop it the first time down, but depending on how we come into that area, and I do expect we're going to hit that area. We've already hit 27.69, meaning in the next half hour. If we hit it with high volume, guess what? The bottom of that is game, and that would be quite a close, folks, because the bottom of that area is, well, it's not that bad. Yeah, no, it is that bad. It's 38, 27.38. Yeah, that was the big number. We went from 27.38 to 27.63 on that bar. So, and you're coming down with heavier than that bar at this particular point. So the numbers you got to keep your eye wrapped around is the 2774 and 2763. Inside the Dow Industrials, we take a look at the Dow Industrials, the strength versus the weakness inside the Dow out here today. What you have is that point-wise, Boeing, you know, it's a no-brainer. And when things go up, Boeing takes them up. When things go down, Boeing takes them down. Boeing is responsible for negative 35 points inside the Dow. Goldman's 26 negative, Microsoft's 15, American Express is 14. Taking it up, at least putting positive points inside the Dow Industrials is United Health. That is putting 29 positive points. Johnson & Johnson is putting 12, and Big Mac is putting 6. Inside the NDX 100, the move is out here today. Now, this is a big change, a monster change, actually, folks, from this morning. It looks like to me that good old Micron had a blow-off top. So here you go. You get Biogen is up 1%. JB Hunt is up 1%. You get Ross Stores up 0.9, taken away from it on the way down. Alexa Pharmaceutical is down 5.2%. Qualcomm's up 5%. XPD is off 3.8%. JD.com is down 3.2. If we go over to Micron, what you're going to see with Micron, these were the leaders out here this morning in a huge way. Micron, yesterday, and this is where this blow-off came from. Yesterday, normally Micron does anywhere from 45 million shares, 80 million shares, 73. At the highs, folks, it came in with 138 million shares. Monster move. Went from 56 to 61. Today, it started out as another move, but you could just taste it. Bottom line, it got up to 63.42. Right now, you're trading at 59.38. Gave it all up. Now, what we're going to have is that you're going to have a daily, but you're also going to have a weekly monster bar here. So it's going to be pretty intriguing watching this shake out. NVIDIA. Let's go take a look at NVIDIA. So what you had out there this morning when the markets were basically stable is that all the chip stocks were up. Well, guess what? They gave it back. NVIDIA tested its high out here of 251.96. You hit 254.50. That's going to be a failure on price and volume also. It was going into 22 million. Right now, we've done 12.8. It's going to get intriguing watching this whole thing shake out, basically. Gold contract. What do we have with the gold contract? GC. Let's go take a look at it. So, gold contract out here rejected 1313, and it did it twice. It's pretty cool what it did out here, folks. So, what you're going to see when Tommy and I were on the air this morning, bottom line is that you're going to see first the CPI number come out. Rex Tillerson came out that he's fired. It goes simultaneously, and by the way, that both of those came out within about 4 minutes of each other, so it's hard to tell what moved what. Bottom line is that inside the gold contract, you went to a low of 1313, you went to a high of 1325 within 1 bar. Then what ends up happening? Guess what? You stay up here for a while, and then that baby comes all the way back down, tests out, that bar had lighter volume, then took off. That baby wants higher price. And that's in the metals market, and the good old King Dollar wants lower price. You stay right there, folks. We'll be coming right back. We have the Dow Industrials right now, down 144. NASDAQ is off 75. S&Ps are down 17.5. We're coming up to that 2763. We're at 2766. Coming right back, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So Dow right now is down 139. Nasdaq's off 75. S&Ps are off 17.5. Percentage-wise out here, we have, folks, you have the Dow down 0.5%. S&P's 0.5. Nasdaq down 1%. Let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the first hour. Don't forget, folks, Basil's got a great program right here every trading day, noon to 1 Eastern Standard Time. Now, all the programming at TFNN, folks, you can get it. Of course, you can go to TFNN. You just hit Tiger TV. Real easy way to do it, no matter where you are right now, just so you can remember. You go to YouTube. At YouTube, folks, just put TFNN in the search bar. When you put it in, you're going to see it. Subscribe to it. It's free. Okay? All that does, what that does is that it can be right on your phone 24 hours a day. When you want to hit it, you hit the phone, you're up and going, you get great video, you get great audio, and you get great programming. We really do appreciate you growling and prowling with us out here. Now, Basil also has a great newsletter, The Opening Call. You can get this opening call right now, 30-day money-back guarantee. The way you do it, you go to TFNN. You're going to go to newsletters. You go to trading newsletters. You see the opening call right there. Let's go up to our man, Mr. Basil Chapman. And the bottom line is that he is in a monster snowstorm. Basil Chapman, what's going on?
Hi, Tom. Absolute monster. It really is. It's the wind has died down a little bit, but it's still there. I'm looking out my window. I went out for a little cleanup there. It's tough stuff. It's about 2 feet. And, of course, if you have snow drifts, it could be quite a lot worse.
So listen to this, folks. The O'Brien clan up in good old South Boston have a fleet of trucks, and they're texting me, Basil, right, with dollar signs. So, of course, what happens, folks, is that, you know, they're truckers anyway, but the bottom line is that in the winter they put plows on them, so they're all happy right now.
Yeah, and, you know, thank goodness, because you really need it. This is heavy stuff.
I guess he just texted me. 2 feet. Do you already have 2 feet, or you're getting 2 feet?
I've already got, because of the drifts, it's at some places it's 3 feet, but it's the minimum is about 14, 16 inches. Yeah.
Wow. Unreal.
And fortunately, it's not just wet. It's just big.
Yeah. That's you guys are getting hammered. Okay. Dow Industrials. We're looking at the Dow, right?
Okay. This is very interesting. Over the weekend, I showed subscribers to my opening call. I said, you know, there are a lot of things going on here, and a lot of the very important areas, like the semiconductors, like the QQQ, the NASDAQ 100, index. This is the power shares. I'm looking at so many of these important, the XLK, that's the tech sector, S&P. These ETFs are all in, for me, in a leg D in the daily charts, somewhere in E, but most are in D. And D is, if I can show you here, this in the Chapman Wave methodology is a very simple technique I try to use. You identify the lowest low bar. You merely count each successively higher peak. At the fourth highest peak, peak D, other things can happen. And that's really important. It can go higher, but at D, other things can happen. And if I can show you, it made a peak D, right? The Dow on the 26th of January at 26,616, 12% correction to 23,360 on the 9th of Feb, runs up to 25,800. And that created, you can see in this left side chart, which is my daily chart of the Dow, you can see that this green line shows that if the Dow broke above it sharply, that would be a very important trend line break. It hasn't. It's been repelled and repelled again today. You can see this red line forms a triangle like a pennant flag, and that says that the 9-period moving average of 25,000, where it is right now, is really important to hold. If it doesn't, watch out for the next level of support, and that'll be on the Dow right there at about 24,650. So for subscribers, you know, we went short the Dow just after the top on the 26th of January. Then we covered and we actually went long, and then we were out of it, and we went short again yesterday, right at the open. You remember there was a very big spike. So far it looks good. You never can tell because this is a very jagged type. There's no clear definition here other than the pattern that I've drawn. I drew it in, weeks and weeks ago, where the lowercase h can go to a lowercase m, and then you got to watch out for the test and break of the left side low. So the most important thing for me now in the Dow is 24,200, because it also goes to the candle that I talk about in the monthly chart called the Chapman Wave Roman candle. It opens at a particular, that was the candle of February, where it opened, made a tiny little wick, ran all the way down, in this case, to the 9-period moving average in the monthly chart, ran back, and usually this particular candle, although it looks bullish because it came all the way back, it's very bearish. If this is the analysis that I've done, it's my own technique. If the wick starts to be traded and broken, the long wick on the downside, on a shorter time period, so I've said to subscribers, if on a weekly basis there's a close below 24,200, be very careful, because we're probably going to go test the low that was made in February. But what's interesting is going through the XLK, so we're short the Dow. So going through the XLK, I'm looking at this is the Select Spider Fund. It's gone to a leg E with a little doji from yesterday. In the Chapman Wave technique, that's called the silent doji from yesterday, because you wouldn't recognize it because today made a higher high. But that's really important if there's an ugly candle the next day and then a lower candle after that. So I'm watching this very closely. If you look at the SMH, which I've spoken to you about for so long, the SMH, the Semiconductor Vectors ETF, made a leg D today at 114.55 all-time high, pulling back very sharply now. So this is in a leg D. So then for that reason, because I was anticipating some kind of pullback, I said to subscribers, I give a very detailed call every day. So for my Dow call, I said if the Dow is not over plus 50 at 10 minutes past 11 Eastern time, be careful. So it was up 190, and then it comes down, 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 and at 11:10 it goes to plus 48. So that was the clue that this could be quite an ugly day. So we went short at the open for the QQQ. We used the inverse short position. So I'm going to be watching this very clearly. It hasn't even made a peak D yet. This is still a leg D. If there's a lower high tomorrow below 175.21, that says it's made a peak D, but I would still want to see some kind of a close, at least 2 sessions with a close below 170 to say, good. Now I've got at least a sell signal in place, but this has been the Qs and the semiconductors and XLK, the tech area has just been on fire. And I think I think they've gone a little overboard and they need a rest. And I'm trying to deal with that. And I think that this is a period of rest that's coming up. So it's very interesting because we in the XLF, which is now at a peak E today, we have Bank of America within that, and we've been long for quite a while. Now, it too has just made a peak D. So I'm going to have to be making some decisions on our long position. And another long that we got just recently is Charles Schwab, and that's SCHW. And that has today made, SCHW, let me get that. That has made a leg D, a new high, all-time high. And what's really interesting about that is that it's holding very well. Here, the technicals are really good. So I like the brokers. I'm not sure just what I told short-term people to get out if it's a swing trade. So I'll have to deal with this because I think it's going to be coming back. It's at 56, 67. We'll see. So it's a very interesting market we've got right now.
You're going to be dealing with 2 feet of snow and the Dow down 200 any second.
Yes, that's right.
Listen, folks, come over to our website at TFNN. You go to newsletters, go to trading newsletters, see the opening call right there, 30-day money-back guarantee. And, of course, check out Basil every trading day, noon to 1. Basil, stay safe, man. Don't shovel too much.
Thank you, Tom.
Okay, have a great one.
Bye-bye.
Stay right there, folks. We're coming right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archived workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's take a look at some of the higher volume stocks out here today. We have Advanced Micro. That is the top dog out there. That was up $3.50. Right now, you're up 17 cents. That is trading at... sorry. No, that's not Advanced Micro. That was Micron Tech. Advanced Micro is up 18 cents at 11.70. You get Micron down. That was up $3.50. That's down 30 cents right now, 59 bucks. GE is getting slammed again. Let's look at GE. GE is toast, folks. What's really intriguing here is that you know, it hasn't been able to get out of its way since this $15 level, going all the way back to the 9th of February. This has been building cause, and you know, it's pretty clean, man. I mean, if you want to, you know, if you have the out of time in the trade, and you see what building cause is all about, whether you're building cause for up market or down market, you're going to see it's quite clear. Each and every time that this thing popped at all on the upside, no volume, contracted dramatically. Every time it's down, they're unloading this thing so fast they can't see straight. I actually read this analyst note out here this morning. It was really intriguing, and you never hear something like this, you know, 10 years ago, of course. He all but said that, yeah, guess what? They're cherry. They're not going to make their numbers. They're dreaming about even coming close to making their numbers because of their debt structure, and what they haven't put inside those numbers that they're claiming they're going to make is any dollar volume for making the company better. So bottom line, GE's in tough shape. Some of the other higher volume stocks out here, what we have, you have Qualcomm down 329. So let's go look at Qualcomm. So what's going to happen there is that the screws are getting tightened all over the place, because there's a couple of the stories out here today. Qualcomm's breaking a swing point. The swing point it's breaking is $60.50. And it's going to be close on the volume. You know, if they could throw $5 million into Qualcomm, you throw $5 million into Qualcomm, guess what? Qualcomm's going back to $54, and that's it's quite a hit from the 69. So what's going on there is that the deal's not going to go through for Broadcom buying Qualcomm. Boeing. So check out Boeing. This is kind of intriguing out here. What's happening with Boeing out here today? So Boeing, folks, moves the Dow Industrials in an incredible way. Now, you know, my take on all these high volume lows are going to get tested. The first, Boeing has one February 5th, $317. Bottom line, had nice counter trend bounce. It went from 317 all the way up to 371. At 371, you had 5.4 million. At the lows, you had 10. You come off the high, and you come off the high with 8 million. You come off the high with 10 million. Guess what? You're going lower. It's expanding again today. Now, what's happening with Boeing? This is going to be intriguing. Boeing has been trying to buy this company, Embracer, for a long period of time. It's a Brazilian company. Bottom line is, looks like that deal is going to basically get imploded, and that deal looks like it's going to get imploded because of the U.S. steel tariffs and aluminum tariffs that we basically put on. So we'll see where this shakes out, but there's going to be implications. These might be one of the first ones coming out of the gate. That's a large one, and I expect Boeing is going to be lobbying, and they're going to be lobbying really quick to probably get Brazil a exclusion also. We'll see where that shakes out, but I suspect piece by piece we're going to start seeing how these large multinationals are dealing with this, and dealing with the aspect that they're not going to be able to do business quite as easy internationally as they have in the past. That's kind of how this is shaking out. Notes and bonds. Let's go to the note market first. We take a look at the 10-year note. So a 10-year note trading 1.5 million contracts. This is dynamite contract volume. You're going into strength. And what we have had in the bond market is this. So February 6th, that's when the bond market actually did have a sign of strength. That was after 2 months of going down. It gave it up in spades, though. It got to 122.02, closed at 120.21, gave it up. That being said, there's volume behind that. If you're watching Tiger TV, that was a different contract that we were trading, but there was volume there. What ends up happening? It goes to lower lows, lays out here for approximately almost a month, almost 20 trading days. Has another sign of strength on the 1st of March. We get to 120.23. Bottom line, now you're coming into that, and you have an expansion of volume. And that's what you need in order to break it, number one, and to get up into 122.02. We take a look at the 30-year, and what you're going to see with the 30-year is the same type of setup. 30-year right now has the volume behind the move today, 308,000 contracts. We are up 17 ticks. You're at 144.08. Nice volume, man. This is good. The high is 341 contracts. That high is 144.20. Now, that high that I'm talking about there is the high from the 2nd of March. Where this looks like it's going to go, however, is the 6th of February. And that's 146.21. Now, if that's how if we get a follow-through, and you get a follow-through tomorrow, you're going to see we're going to have higher prices very quickly. We're going to have lower yields very quickly. The 10-year right now is at 2.837. And what that's going to be all about is that would have follow-through in the market going south. You know, so we'll see how this comes into the close. King dollar is still in tough shape. Bottom line, King dollar has been going down for a long period of time, since January 3rd of 2017. What we have out here today, this is kind of interesting, actually. We get light volume. Out here today, there's not a lot of sellers inside this index because you get 5,700 coming down, and you're coming down into, oh no, I see, this is low volume too, interesting. Okay, so what are they still trading? They can't be still trading the DX, let me see this. Can't be, yeah, they are, holy cow. Okay, so this dollar index, this keeps going right to the, almost the end of expiration, because this last trade is on the 18th. Normally these things get rolled over. Yeah, so the dollar's going down with volume too. Bottom line, you're coming into 23,000. You've already done 26,000 contracts. Yeah, what's game here is 88 to 255, 288, 150. That's what is game in order to basically get into that low. Now that's on a short-term basis. On a larger-term basis, what you have is that this dollar, folks, is in a much larger ABC structure on the way down. You know, when we actually did the oh, someone called yesterday. That was so cool. Yeah, no, the FXE. So check this out. This is really dynamite, man. So the FXE is the long euro. And, yeah, this is the long euro ETF. Plenty of volume in it, right? And this, folks, is a confirmed ABC structure on the way up on the weekly. And this is intense. The reason this is so intense is that that is saying that the euro is going to be running up to the 139 mark. And if we get the euro running up to the 139 mark, guess what? Gold is going to the moon. The dollar is tanking. And bottom line, you know, the next leg up, you know, yeah, it's 139. Inside, and we're at 123. That'll be a monster move. Stay right there, folks. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. The Dow right now is down 225. You get the NASDAQ off 93. S&Ps are off 24. Let's go take a look at the SOXI for one of the tigers here. No, so SOX... SOXI? Let's see. No. Oh, thanks, Paul. SOXL. So, okay, so this is the direction daily 3 times semiconductor bull. 3 shares. Okay, he must have went short this, right? Let me see this. 1 second. Let me just read this. Yeah, perfect. Okay, so what happens is that now this is a pretty cool way of doing this too, folks. What ends up happening is that, you know, now this is the 300% long position, and you can go short the long position. Now, and this is what ends up happening when you're going short the long position, and these are at higher prices. Now, it's going to be the same percentage move, but dollar move, price move, oh, baby, it's monster. So this has gone from 209 to 189. And the number to keep your eye on is going to be 187.44. Let me pull this back for this intraday. Let me look at this. The reason I brought up that 187 number is that what you have, that would get you back inside the lower range. So this is what you have. Look at this, man. This is pretty cool. So 189.17, you're at. Now, the last buy here has volume, so I wouldn't close it yet. But what you are doing is this. This is where you want to be cognizant of what's happening here. This is coming into your updraft on Friday afternoon, Friday morning. And you're coming in with lighter volume. So, you know, you get a good little score here. I'd wait right to the close. I wouldn't close it before the close. And the reason being, if I go over to the S&Ps for a second, I'll show you something which we already talked about in the S&Ps. The S&Ps intraday got down to this number that we were talking about, and the number was the high of the spike at 8:30 in the morning, and that number is 2763.75. So we made 2763. And what normally happens is that you normally get down there, you know, bottom line, and it will bounce off that, which it did. That being said, what's happening, that is 3,300 contracts. Now, let me bring this closer, because you want to see what did you hit it with, because 33 is not a big number. We hit it, okay, we hit it at 3,100, which is cool. That's a good number. And we have 6 minutes left on this 10-minute, and you're at 22. Okay, so what that's saying is that we're actually going to have hit it more than likely with higher volume, because you take the 22 or 5 minutes into the bar, you get 44. Just, you know, you're gauging quickly. 44 going into, what did I say? into 33, and you get a bad day on, guess what? What that sets up, number one, that more than likely we're going to close inside the 2763. And what it does do, when it does give game, and this is where when you get a nasty market, that this thing can really get trashed in about 2 seconds. And when I say trashed, another 10 S&P points down as we come into the close. And if that's what you get, you're going to get that SOXL also firing down. And then what I would do, I would just close it out at the close. You know, 877-927-6648. Let's go take a look at the king, Amazon. Let's see what good old Amazon did out here today. So Amazon's down 1060, hit 1617. Right now you're at 1578. That is a long way to get back inside its lower range. NVIDIA, oh, I know, I want to look at Goldman. So Goldman, going to have a new CEO. Goldman is down $5.50. It's going to be a failure on price and volume at this 273 area. So the first time we were up there with 3.8 million, we tested with 3.1, we gave it up. Oh, this is pretty cool. So check this out. So you get a triple top, and what you have is this, is that your first high in Goldman was 273. You had 3.8 million shares. We came off that high, what's sticking out like a sore thumb is February 9th, 5.9 million shares, 239. So you get the big price spread, 273 to 239. It does the bounce, monster bounce, goes from 239 all the way up to 273. You have volume of 3.1 million. Not enough. You had a slight expansion of volume on the way down. We did 3.4. Right now, you're only at 1.8. So you have two different things happening. You got up and over the highs. You're going to close underneath them, and that is a very large contraction of price. ExxonMobil, let's go take a look at the, we get the oil numbers coming out after the close. ExxonMobil's basically taking its next leg down. You know, ExxonMobil, we're at 74. This come off a high of 89. Now the ExxonMobil as well as Chevron, they did not get out of the trading range from February 9th. That's how weak the oil stocks are looking. So what you have out here is that, you know, Exxon, you went from a price point of 89, you're at 74, you have the high volume low at 73.90, but bigger still for Exxon is that when you bring this back, what you're going to see is that you get a high volume spike low at 66.55. And it looks to me like good old 66.55 is going to be had. And of course, the intriguing thing, you know, inside Exxon is that Tillerson was the, well, he worked for Exxon, I believe, 30 years. And you know, the way that the administration works, folks, it's certainly not like Exxon. He got fired, and he got fired today on a tweet. He actually, the way that the tweet came out when the CPI came out this morning. And then it looks like a couple hours later, that's when the whole thing actually came down. So pretty intense that you go from the top of the hill in Exxon. And by the way, Exxon, when you take a look at the numbers on Exxon, this is like insane. Number-wise, okay, this is a company that takes in $295 billion a year with a B. Monster move. We go over to Chevron. We take a look at Chevron. Same type of setup in Chevron. Now, Chevron's a little stronger than Exxon, but can't get out of the February 9th downdraft. The top of that was 118. Got to 118 today, gave it up. The bottom of that is 108. And it looks like to me 108 is game. If we go take a look at the XLE, the whole sector, what you have inside that sector, yeah, that hasn't been able to get out of it either. 67.50. Well, actually, 67.58 was the high of the ninth. The low of the ninth was 64. So, yeah, you're still there. There's a lot of sellers, man, in this thing. What's going to be intriguing is that the oil contract, we'll have those numbers coming out 4:30 today. Oil right now is trading down 1.2% at 60.59, and it's amazing, you know, that the oil contract itself is staying this high when the equities are basically signaling that we're going to get lower oil coming at us. Well, we'll find out when. Stay right there, folks. We'll be coming right back. We have the Dow Industrials right now down 195. Nasdaq's off 22. S&Ps are off 87. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the Dow right now down 163. Nasdaq is off 76. S&Ps are off 18 percentage-wise. What you have out here is that you have the Dow down Dow down 0.6 of 1%, S&P 0.7, and the Nasdaq 1%. And if today's not exciting enough for you folks, bottom line is that we're going to get more excitement. Why? Because it's coming across the tape about since I started the program. Yeah, it actually came across about 20 minutes ago. That U.S. Trade Representative Robert Lighthizer has presented a package to President Trump that is going to slap $30 billion a year on Chinese imports. That let's see what we have here. Tariffs are going to be on 100 different Chinese products, including electronics, telecommunication equipment, furniture, toys. The administration is considering tightening controls on visas, exports of certain goods and technologies. Then they go on to say that no final decision on the content or the timing of this. But bottom line, guess what, folks? We're going to be paying up. If you want something out there, you better go get it right now. I suspect I don't know if we make TVs anymore, but TVs are so inexpensive. They start slapping tariffs on them. I'm not sure if we have a TV manufacturing plant left. Bottom line, though, guess what? This is looks like it's gonna turn into quite a tax war, because that's what we're talking here, taxes on everything. The ironic part about it, though, is that it's like, okay, we had a tax cut, and now bottom line is that there's going to be big taxes coming across on many goods. So inside the inflation number, guess what? That's going to fly. You know, we'll see what that does to the aspect of, well, you know what's intriguing about that, too? The real question is that it's always the CPI, like what's inside the CPI. Well, we know what's inside the CPI, but it doesn't necessarily relate to what we actually have to buy all the time. You stay right there, folks. We'll be coming back with some numbers after the close. We have the Dow Industrials down 170. NASDAQ is off 77. S&Ps are off 18. And bottom line, you have the major indices fail as they come into the February 27th swing area. We'll be coming right back with numbers, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Got our man, Tim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't take anything personally. Transform your life. This is a good card, but it's a tough card. When you refuse to take things personally, you avoid many upsets in your life. Your feelings of anger, jealousy, and even sadness will disappear if you don't take them personally. Easier said than done, huh? Market-wise, let's take a look at it out here. We have the Dow Industrials down 171. NASDAQ off 77. S&P's off 18. What you have out here, folks, is you get a failure on price, failure on volume inside the S&P. We take a look at the S&P. What you have is this. SPY got to a price point out here today of 280.41. You got over the high of the 27th, which is the last major swing point, 278.92. We had 99 million shares there. That's where it had failed on the counter trend bounce. That was going into 173 million shares. We did 83 today. You failed into 99. You failed on price, failed on volume. What that sets up is, guess what? Now you're going to set up a test of the last swing low, which is the 264.82 area. NASDAQ composite. Now, the composite as well as the NDX, different animals, and this is why. The composite, down big, down a full percent. Bottom line, that being said, what you have, sorry about that. Okay, so what you have there is that when the NASDAQ broke topside, the NASDAQ composite has to get back inside the 75.05 area. Now, we're close to it, that's for sure, because we're at 75.11. Gave up quite a bit today. You get inside that. Now, this is where this is going to get really wild, because when you have a break topside and then you come back inside that area, this is a real problem. And what the problem would be, you can't bust them up. Guess what? Inside the NASDAQ composite, we still have that high volume low at 66.30. So that's going to be game if, in fact, we get back inside this 75.05 area. We go into the NDX 100. Same type of setup inside the NDX. Gave it up good today. That being said, we're down 84 bucks. You're at 70.46. The NDX would have to get back inside 70.20. Now, that's not going to be hard to do, that's for sure. The way this market is trading, bottom line is that can get back inside there, and it can get back inside there pretty quickly. The small caps. We go over to the small caps. We take a look at the IWM. IWM got into the price point of 160.30. The high's 160.62. That, bottom line, I wouldn't call that a failure on price and volume. The reason being is this. You did 17 million shares versus 20, but you didn't get to the high. You know, that saying wants to pull back a bit, but when you don't get to the high, that can turn into that, guess what, it wants to test it again. Now, Dow Industrials are really weak. The Dow couldn't even get up into the February 27th high. The Dow looks to me like that thing wants to barrel down to 24.21. That was the last swing low that was established out here on the 2nd. And that will be pretty easy in the Dow. The reason being is that it's been great for the Dow on the way up. Bottom line, on the way down, it's a little problem child. Why? Because you're talking about a price-weighted index, and on the way up, it's real easy for Boeing to put big numbers into the Dow. On the way down, it's real easy for Boeing, as well as a few other stocks, to put large numbers negative into the Dow Industrials. Out here today, you had Boeing putting a 38 negative, Goldman 33, Microsoft 16, American Express 15, 3M 15. Bottom line is that this baby wants lower price. Now, gold and silver, they both caught a bid. What they have done is that when the CPI come out, we had, well, simultaneously what happened is this, well, within about a minute and a half. Simultaneously, the CPI come out, and Trump basically tweeted out that he's firing Tillerson. So what you have there, when you take a look at this intraday, what you're going to see is that this monster move inside the gold market. The market didn't quite know what to do with it. Within the matter of basically a minute, you went down to a low of 13.13. You got back up to a high of, let's see, 13.25. Now, what the gold was doing is that gold was actually coming into its low from Friday, and it did it with a lot lighter volume, even with that type of volatility. What ends up happening, gold stays up there about an hour and a half, gives it up again, comes barreling back down. But as that came barreling back down, if you're watching Tiger TV, what you're going to see is that it was an intraday. It was a classic. You break topside with volume, you pull back with lighter volume, and you go topside again. When we had come back down, you did 20,000 contracts versus 26,000. Bottom line, didn't make it to the lower part of it, rejected price. Now what you have is that you've done 320,000 contracts. You're basically sticking your nose up just above where we've been consolidating now since February 7th. You know, that is after we had a sign of strength on the 14th. Bottom line, my take is that we're going to be running up to this 1370 mark. Silver, same type of setup in silver. Silver also came back. Bottom line, you know, high volatility. Low in silver today was 1645. High was 1669. And bottom line, silver, 68,000 contracts. That's great contract volume inside the silver market. I suspect higher prices coming at us. King Dollar. King Dollar bottom line just can't make, can't catch a bid. What we have with King Dollar, down 142 ticks today. You had 27,000 contracts. You have some volume behind the move. The last swing low out here inside King Dollar, which looks like it's going for, is 88.150. That's approximately 1,200 ticks from where we are. I expect next few days it's going to make it down to that level, and we'll see whether we break that level. Short term, that's where it wants to go. Longer term, folks, we are in a very large ABC structure on the way down inside of good old King Dollar. We go over to U.S. Steel. U.S. Steel took a beating out here today. This is pulling back to where it broke out from. We'll see whether it holds price. U.S. Steel is down $3.33. You're trading at 40.24. The breakout area is 38.59. The volume characteristic is 38 million. That's going to be a big number to keep your eye on. You stay right there, folks. We'll be coming right back with some more numbers. Dow Industrials finished down 171. NASDAQ off 77. S&P's down 16. We're going to be coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials finished down 171, NASDAQ off 77, S&P's off 16.5. Let's go over to our man, Mr. Andy Hecht, as we do each and every Tuesday at 20 past the second hour. And don't forget, folks, Andy's got a great show here every Tuesday, Thursday, 5 to 6 Eastern Standard Time. Now, all that programming, get right at TFNN. Also, real easy way to do it, just go to YouTube, folks. You go to YouTube, put the app on your phone, hit TFNN in the search bar. It comes right up. Subscribe. It's free. Bottom line, you can listen to any and all the shows you want anytime. Andy also has 2 great newsletters. He has the Technometer Commodity Report, which is his weekly newsletter. He has the Daily Essentials, which is his daily newsletter. You can take a look at both of them. 30-day money-back guarantee. The way you do it, you go to TFNN. Newsletters, if you like the Daily Essentials, go to Trading Newsletters. If you like the investment one, go to Technometer Commodity Report. Go to the investment newsletters. Andy Heck, what's going on?
Hey, Tom, how are you?
Doing great, man. Yourself?
I'm doing good. I'm doing good. So politics affecting the markets today, certainly with this tariffs issue. Looks like in the next 2 weeks or so, we'll get an announcement on what the president intends to do with China,
right,
which is going to be real interesting. And when that news hit the market, that's when stocks started to melt.
Oh, there's no doubt. You know what's interesting there too is that, I mean, they're saying at this point it's only 30 billion, which isn't a lot, but I think the market look at it and say, okay, this might be the beginning, right?
Right,
yeah.
right. Right. The Tillerson news this morning really had very little effect on the market.
No, that shook it off in a second, man.
Exactly,
yeah.
Exactly. That had very little effect. But the tariffs, ooh, that's a different story.
Yeah.
So,
yeah.
I think that we're going to see the one market that looks like it's getting ready to melt to me is the dollar.
Well, that would make sense because guess what? The bottom line is that you're not going to need dollars to buy stuff if all the taxes are going to be on these tariffs.
Right. The dollar looks like it's going to try down here at this 88.15 level. I could see it going to 86. Depending upon what comes out. If they're priming the market for tariffs on China, they're coming. That's the bottom line.
Well, hey, folks, if you want to see something now. This is pretty intense. I wasn't looking at this as when this actually happened, that this was the tariff, but I'll show you something, man.
Oh, you're going to go back to the Bush tariffs?
Yeah.
Yeah.
The dollar, folks, went from 121 to 80, like in a heartbeat.
Right.
It's like, oh, man, you got to be kidding me, man. I mean, so, at that point.
Listen, it plays right into, listen, they have not been quiet about their desire for a lower dollar. The administration. They walked it back a bit in the beginning of January at Davos when Mnuchin said, a lower dollar is better for business. The president walked it back a little bit, but they want the dollar lower. They use the dollar as a tool. So, I think they're going to get what they want, and I think this dollar's going lower. No question about it.
Well, you better get in the metal market, folks, because that's the case.
Good news for gold and silver. Exactly.
Your wealth is going to disappear, and you don't even know it. That's the quickest way to steal wealth, by the way, folks. Okay, it's
to play with the currency.
You kill the currency, right?
Absolutely. Yeah. Absolutely. So I got my eyes on silver here. It's kind of making some rumblings here, like quiet tremors. And, March, April tends to be an interesting time for the silver market. So we'll see what happens here.
I really like what it did last Friday when, they took gold south.
Right.
It came back all right. But this silver stayed nice, man. I mean, that's
silver never went below that 16.16.
Right.
And it actually closed up on the session.
Yeah, it did.
So,
yeah.
Right. Right, and gold. Let's take a look at what gold did here. Yeah, gold
was great today. I mean, I like what it did, but I think silver showed its hands last Friday. That they couldn't sell it off any longer, and that's a big number, man. That's a big number.
Big number. So, it's going to be interesting times ahead. Let's talk a little bit about crude oil.
Yeah.
I know we have the numbers coming up, and hey, that's going to really affect if we're going to stay above $60 here. The number tonight and the number tomorrow. One of the interesting things about crude oil, which I'm looking at here, is I'm looking at this Aramco IPO, which they seem to be now saying it's going to happen later rather than sooner. It seems that, when you look at the valuation of Aramco, it's so tied into the valuation of Saudi Arabia that analysts are having a hard time getting their hands around what the company is worth. So there's a couple of things that can happen here if they push this off deep into 2019 or even later. One thing, very interesting, I'm looking at the Brent WTI premium.
Okay.
Which has, let's just put this up here for the May contract. That has gone, from like under $3 on March 2nd to it went to over $4 today. What that's telling us is that, hey, the one offshoot for crude oil, if they do delay the Aramco IPO, is that OPEC might continue production cuts into 2019.
Okay. Yeah.
And that's what this spread is kind of saying. And that would make some logical sense here. Saudis are the most powerful ones there. The Russians are certainly not going to complain about the quotas that'll keep the oil price high. So, that could be an offshoot for oil, and that's like longer term, that's constructive for the market. But short term, I think we're in a range, Tom, 58 to 66, and we're on our way to test the bottom end of that range.
Yeah, well, it's gonna. I mean, that whole UK deal. Russians basically using the nerve gas on. One of them was their agent a long time ago, right? But he turned, right?
Yeah.
It looks like the UK wants to put on some restrictions, and we'll see whether those restrictions are going to be inside the crude market, right?
Yeah, that's true, and maybe the U.S. will be exporting a lot more crude oil because our crude oil exports are 10.2 million barrels and rising.
Yeah.
So, we are a force in that market now. But this stuff with the Russians and their spies, and it's nothing new.
Well, it's nothing new, but the reality is that when you're doing it, when you're killing people
on foreign soil.
Exactly.
Right.
That's
but
serious.
they did it in Britain before. Britain is their spot. They killed that guy with polonium, right?
I understand that, but the other side of the reality is that most times you're going to see some retaliatory deals. I mean, I can't picture England just sitting there not doing something retaliatory, not killing someone, but basically putting more
restrictions. Yeah, and the EU will probably do the same thing if they have strong evidence. We'll see how it all pans out. We'll see how it all pans out. But the bottom line for oil here is that this Aramco deal is important. We got to keep our eyes on this one. And you talk about governments doing things. It turns out that Ritz-Carlton was not such a wonderful place for the people who were held there.
Yeah,
and there was some torture going on there.
Yeah,
some more than light arm twisting, should we say, for people to part with their wealth.
Man, what Andy's talking about, folks, is the story in the Wall Street Journal, man, and it's intense. There's no doubt. It's, you talk about the rich twisting the rich. Oh, baby.
They're twisting them like sponges.
Yeah. Stay right there. Andy and I are coming right back, folks. We had the Dow Industrials finish down 171. NASDAQ off 77. S&P's down 16. We're going to be coming back. We're going to have those oil numbers for you when we come back, folks. Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Talking to our man, Mr. Andy Hecht. We are talking markets. We are talking commodities. And any minute, we are going to be talking what these API numbers out, and they're always just a little bit late. Yeah, there's such a disconnect, man, still between the Exxons and the Chevrons of the world and the price of oil, Andy. It's really intriguing,
absolutely.
you know?
Absolutely.
I mean, because let me ask you something. I mean, the Exxons and the Mobils, the bottom line is that they do the same thing as that Aramco does, right? Really, right? They take oil out of the ground, except Aramco has it a lot cheaper, right?
Yes, and they refine it and all that kind of stuff, and they're regulated, which Aramco really isn't. I agree with you. I think that part of the factor of pushing this IPO further off into the sunset here is that they don't like the value of the oil sector here as far as valuations.
Okay.
And they think that the price of oil can go higher.
And they're going to try to make it higher. They're taking a big risk. Well, I guess they can take the risk now because they just basically took off the billions that they got to get. They can keep their deal going for a few years, as we were just talking about.
They just had a big collection from the Ritz-Carlton.
Right.
A huge collection. I mean, tens and tens of billions of dollars that they expropriated from their wealth. These are people that they gave the right to steal.
Yes,
basically.
Right.
So they're now taking that back.
Right, and folks, it's a great article in the Journal.
Yeah,
it was in yesterday, and as Andy just said, it is one of the most corrupt societies out there. So they gave them the right to be corrupt. Then they decided they're going to change the rules, and that's
right. And they changed the rules because of this Aramco IPO upcoming. But the way they're changing the rules, it's not like they're just levying a tax. What they're doing is they're basically breaking arms.
Yeah, right.
So yeah, it's kind of mafioso there. So let's do a tale of two markets here in the soft commodities sector.
Okay.
Cocoa has basically completed a 50% retracement of the move from $3,422 per ton down to $1,769. That started in December 2015, completed in June 2017. The midpoint of that move is $25.95.50. Today we got up to $25.87.
It's quite a move, man. It's
quite a move. A move. Now, we should remember, cocoa looked awful, correct? I mean, we were talking about it last June. It was looking like horrible.
Yeah.
But we said at the time, listen, these things get cheap. Eventually they recover. Sugar is in a very similar situation that cocoa was in back last June. Sugar today traded to a low of 12.53 cents per pound, closed about 9 ticks above there. But if we go back to last June's low, look at what we got. We got a double bottom here at 1253. If 1253 can hold, it could set the stage for a recovery in sugar. So keep that in mind.
Boy, this is going to be interesting. Yeah, let's look at this.
I do like this sugar market here. I think there's value there. I'm not saying it's going to go up tomorrow or the next day or maybe even next month, but eventually the price of sugar will go higher because producers are going to stop output at these prices, at these low prices, and world demand continues to grow for all food essentials, and sugar is one of those.
Boy, this is quite a chart, man. You know, I go back to what 2011, we're at 36 cents a pound. You get down to $10 cents a pound.
10.13 in August 2015.
Yeah, I can see that.
If you look at it for a really long period, like if you look at the monthly chart dating back, well, let me even look at the annual chart.
Yeah, I can go back 50 years. So.
Yeah, take a look. Higher lows, Tom.
Yeah.
Higher lows since 1985.
Yeah, that makes sense, right? You know.
Right. Yeah. Listen. It's not just sugar. You see it in almost every agricultural commodity. It's the effect of demographics. And the bottom line here is, you know, sugar is getting close to a price where producers will cut output, inventories will start to drop. We saw it in 2015. We're bound to see it again. It's a good place to start scale down buying some of these ETF products on the sugar. I kind of like the whole setup.
Let me ask you, now that I get this up here, this is pretty cool. I remember this. I wasn't in this commodity. This was my first trade in orange juice. I lost $3,000 in 5 minutes, right?
Yeah, of course. You could do that on any day in orange juice.
No, I know. This is 1980, man. That was a heck of a market, man, right?
Oh, that was the height of inflation. But look at where it was in 1985, 2.27 cents per pound sugar.
Okay.
And I'll never forget turning to my boss at the time, saying to him, hey, this thing is cheap. It's not going to go to zero. And his answer to me was, I said, we should get long this thing. His answer to me is, why would you ever want to buy anything they give away?
They give away.
Right?
Yeah. And you know what, folks? They don't give anything away anymore.
They don't give anything away.
Yeah.
Hey, the API number's important today. You see them yet?
Let's see. They're late today. That's why they probably know they're important today.
Yeah, they are important today. I mean, crude oil is sitting on the edge of a cliff here.
Okay, here we go. So crude inventories increased 1.1 million barrels. Cushing was a draw of 156,000. Gasoline was a draw of 1.26 million. Distilled, that's a big draw, 4.26 million.
That's bullish. That'll hold the price.
Okay. Okay.
That should hold the price, which is not a surprise. Listen, there's bullish and bearish factors at play.
Yeah, it's holding it right now. It's holding it right now. Yep.
Yeah, it should hold 60 here, and we'll see what happens. But that's you know, they expected a gain in stocks. 1.16 million is really not that massive. You know.
Yeah.
Really not that massive. But the distillates, hey, I heard you talking to Basil in the last section. Oh. That's why the distillates are going down. I mean, you know, it's snowing like crazy.
Oh, that storm in Boston, folks, be safe. I mean, that is one monster, you know.
It's a monster. They got 2 feet already on the ground?
They're 2 feet already. Basil was saying that you get drifts to 3 feet. I get pictures on my phone.
Yeah,
they've been sending me some pictures, man. I mean, it's pretty intense up there.
Keep the faith, though, folks, because in 2 weeks it'll be 70 degrees.
Oh, yeah, listen, you know, they were lucky. Last Thursday they got hit, and it was lucky Friday was 40 degrees, so that got rid of a lot of snow. But, you know, this is a big one, no doubt.
March is a tough month, always in the Northeast. The biggest snowstorms, for some reason, always come in March. Never January or February. You know, I mean, we get...
Isn't that wild? It really is, man.
It's wild. It's wild. It just gets everyone ready. It makes everyone appreciate the spring and summer so much more. That's for sure. But look, lots of volatility on the way, and you know, we got the Fed meeting next week, so that's going to create some volatility in markets. And you know, I don't think Trump's done cleaning house in his cabinet. I wouldn't be surprised to see some more cabinet members go over coming days.
Yeah, why not?
Yeah, I mean it seems to be it's spring cleaning in Washington D.C. Right?
Can you imagine? You know, it's amazing though. You know, when you look at the aspect of Tillerson. Tillerson runs a $800 billion company and gets fired on a tweet. pretty intense.
Yeah. That was.
Oh, listen, it is what it is. I'm just saying, it's like, oh man, that's like intense, man.
It is what it is. I mean, you know, you got others who are hanging on here. The Attorney General also has been kind of under fire. There are others in that administration who are certainly under fire.
Yeah, totally. Well, guess what? 20 minutes, you're up, brother.
I'm up.
Thanks,
I'm
man.
in the batter's box.
In the batter's box, 20 minutes. Babe Ruth's coming up. Thanks, Andy.
Thanks.
Stay right there, folks. Coming right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go take a look at the ETF structures out here. So first, we'll take a look at the diamonds that, of course, represent the Dow Industrials. Bottom line is that what you had with the diamonds, they went down $1.74. You did have an expansion of volume. That's saying, guess what? They want to go after the swing low from the second, which is 242. Right now, you're at 250. The SPY, what we had with the SPY, failure on price, failure on volume as they try to get into a high. 89 million shares versus 99 versus 274. So this is certainly a big number inside the SPY. What that sets up a run to 264. You are at 276. NDX 100, still a different ballgame. You don't have a breakdown yet inside the NDX. What you got with the NDX is it actually got a higher high, and you have volume. You have 54 million shares we did out there. It does come barreling down. You're at 171.71. Now, this would have to come down another 81 cents in order to get back inside the lower range. I expect we're going to do that, but bottom line, it's not there yet. What the Qs still have is that they have that high volume low at 150.12. I do expect you're going to see that get hit. The IWM, small caps. Actually, let's go to the Russell. I'm going to go to the Russell Index itself because our RUT Russell, one second, RU. Okay, so we get into the Russell Index. That's trading 1592. I think I'm going to have this volume. I should have this full volume on this. Okay, I do. So we're coming into 291 million to 293. Interesting. Oh, no, I see. I don't get the volume until later tonight. Okay, so we had 293 yesterday. I don't get this till tomorrow. Gold contracts. So first, let's get into this gold market. So the GDX. We go over to the GDX next. What you're going to see inside the GDX out here is that we did 17 million shares out here. You had a sideways move, down 9 cents. Not bad, not great. It looks to me like GDX is going to hold 21.64. Right now, you're at 21.67. The XAU, the HUI, XAU out here flat today, 79.70. We had volume come in to the XAU yesterday. The most important one right now is the Gold Bugs Index. The reason being, folks, is that the Gold Bugs Index has been having a hard time staying inside the range. And the higher range is 174, basically 19. And right now we're at 174.25. So you can see, once again, bottom line is that that range is important because what we did is that in the Gold Bugs Index, we broke that range on the 9th of February. We broke it again on the 1st. We broke it again on the 8th and on the 12th. So that's having a tough time. If we go over to a couple of the largest equities inside of that, Barrick would be one. Barrick's basically up 5 cents today, 12.18. That is trying to get some strength. Newmont has strength. You know, Newmont, bottom line is that that's not even close to its lows. The lows in Newmont go back to $34. Right now you're at 38. So that is a number that you want to basically keep your eye on. The GLD, which is the Street Tracks Trust, this little baby out here traded 4.7 million shares. This is a nice setup. This setup here is, bottom line, saying that gold, physical gold, is going higher. What we have out here is this. You have a high volume high, January 25th, 129.51. You have another high volume, great sign of strength on the 14th of February, Valentine's Day. We go from 126 to 128.59. 16 million shares traded. We rejected the low last week. Actually, rejected the low March 1st. I rejected the low again last Friday. When we went topside on February 14th, that broke the downtrend. Now, when you put this together and then we move this back a little, it really gets cool. Because what you're looking at is you're looking at a consolidation that has been in place since June of 2013. You know, you're talking about big numbers here, man. That's almost going to be a 5-year consolidation. That'll drive you crazy. That being said, what's happening is that you get to 131, which is 6 points away. You break topside, that is going to be a monster break. Why? Because of the way that we broke down. When we broke down, it was fast and furious. So there's not much in between the price point of 130 and 174. And so that a 174 gold, by the way, would end up getting you about a 174 GLD would get you approximately here. I can give you this. And I'm going to show you something, too, inside this gold so you can see how this works over the course of years and what this will actually mean. Okay, so you can see that physical gold's trading at 1326. Now, GLD is at 125. When this first started, that would trade at 132. Because what you have here is that, bottom line, is that the definition of the GLD, it's an investment fund The objective is for the shares to reflect the performance of the price of gold bullion less the trust expenses, okay? So what you can see is this. Over the course of the years that the GLD is traded, bottom line is that the inception date was November 18th of 2004. So we have, approximately, 14 years? 13 and a half years. So 13 and a half years, what has happened is that 13, yeah, basically, it's eaten up basically 10% in expenses. And if you take a look at this, you're going to see this expense ratio is 0.4%. That's the correlation inside there. So that's when I just brought you to the aspect of how the way this is set up, if in fact we get up to that 174 area, you're going to see that 174 would be equating to approximately 1,900 in gold right now. So, and as time goes on, which is going to be interesting, folks, as time goes on, that correlation is actually going to be harder to get. Another 10 years from now, guess what? You'll be down more than the aspect of what we were the first 10 years. The reason being is that the expense ratio is 8%. And of course, the higher the number goes, well, guess what? The bottom line is that 8% of, 0.4% of 1, 0.4% of 10, 0.4% of 100, you can get the gist. 0.4 of, $1,327 is certainly a lot more than 0.4 of $282 when gold was basically when they were first starting. Actually, it was GC. Let me see when gold started. Not started. So you get November of 2004. I remember this so well because I had started the gold report in 2002, and it was going to be a big number when the GLD came in. Sure enough, it was, because you had buyers. That easy way to buy gold. Yeah, so that started approximately, there it is, 400 gold. That's where that started. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go overseas and take a look at the DAX and the FTSE. So the DAX in Germany, folks, has been having a tough time. It did not get the type of counter-trend bounce that we got off of that February 9th low. February 9th low inside the DAX was 12,003. It did a bounce up to 12,601, then gave it up and broke that low on March 5th. Came back up and gave it up again today. So this is going to be really intriguing watching how it's going to go after the lows. Right now, the DAX was down 197 bucks out here today. And if we take a look at this, what you're going to see is that bottom line is that you got the expansion of volume, too. You know, we did 135 million shares. That, you know, DAX doesn't do a lot of shares. You're going into 113 million. Now, that number there is setting up that, guess what, that DAX can basically break apart. And if that's what you have, it's going to be intriguing for our markets because the DAX is trading back where we were in February of 2017 rather. Now the FTSE, let's go to the FTSE in London. FTSE 100, same setup, problematic in a big way. FTSE, you know, went from 77.92, call it 7,800, straight down to 7,000. So bottom line comes down 11%. Small counter trend bounce gets to 7,300. Guess what? FTSE unloaded again today, down 75, just over 1%. Volume 735 million. You're going into 800 and you're going into 896. So that was an expansion of volume. You need a little bit more volume, but it's a dangerous move, folks. Particularly a dangerous move because what you have 2 separate high volume lows. That do basically a much lower price. If we go back to the FTSE 100, now this is where this is going to be really intriguing. The FTSE 100 is trading where we were trading in October of 2016. So this is absolutely a failure at highs, at a high consolidation. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it and fly with it. Everything you need's right inside you. Have a blast with it, man. Yesterday's gone. Tomorrow's not here. What are you doing right now? Have a good time. Look forward to speaking right back here tomorrow morning, 8 o'clock. Wow!
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.